You are still watching Lunch Money right here on Business Television India. We've seen a bit of a weak show from Prime Focus's Q2. In fact, the stock, let's pull it up for you, at the moment is trading under pressure. Just want to pull up what we are seeing right there, just showing you what's happening right there with the stock. In fact, the company has talked about profits and they seem to have gone to losses with a sharp slide in margins as well. But let's talk a little bit more about what's really happening behind the scenes now. I understand that the Chief Financial Officer, who's Nishant Fadia, is joining us on the phone line for a fine print of Q2. Ms. Fadia, thank you so much for having this conversation with us right here on Business Television India. You've posted a loss this time around. Can you tell us what's happened there?
Yeah, thanks for having me. So the loss actually, is largely due to a couple of one-time items because we've extended the exercise period for some of the ESOPs which we've issued, and that's caused a one-time charge in the P&L. Apart from that, we have a finance cost, a one-time finance cost on the early extinguishment actually of a liability, which was being earlier amortized. So, those are both one-time non-operating, honestly, charges. But from an EBITDA perspective, there is a slight reduction on a year-on-year basis or a QOQ basis because there's a new accounting standard, IFRS 15, which is essentially had us push some revenue out to the next quarter, but while we booked the cost in this quarter. But from order book seems good. We're working on some good projects for the next quarter, like the next Wonder Woman or the next Men in Black, the next Godzilla for that matter. So we are not unnecessarily perturbed by this. I think this has also been a traditionally slow quarter for us, the second quarter. But again, my sense is that they'll probably catch up during the next few quarters.
All right, so that's the hope, and this quarter is generally a slow one. But just let me take a moment to tell our viewers about SpiceJet's second quarter numbers. They've just come out, and you're looking at a PAT of actually a loss coming in of 390 crore rupees. That stock is now trading up by about 3.75%. Remember, with the fall in crude oil prices, we've seen the aviation stocks move up, but now we'll have to see the impact, and you see the stock now sliding in trade on the kind of numbers being reported by SpiceJet. Jet, of course, has reported losses, and they are quite significant. Compared to that, of course, SpiceJet now reporting a loss for the second quarter of 390 crore rupees, and we're looking at a revenue figure of 1,880 crore rupees as well. So that's the latest that we are getting. The total income from operations, you're seeing that on your screens as well, is 1,848 crore rupees. And the loss on account of fuel costs and rupee depreciation is what the company is reporting for the second quarter, and their growth strategy is on track. At least that's the word coming in from the management right now. We'll watch out for more as the day wears on, but this is the latest coming in from SpiceJet. But we're talking about Prime Focus with Mr. Fadia. Mr. Fadia, we can see that you mentioned this one item, this one particular item. We can see that the revenues, they are up. Your EBITDA margins, they've come down significantly. No major aberration in your P&L in one particular item. Now, do explain to us the exact reason why we are seeing this.
Sure. Like I was saying before, this the one-time charge of about 26 crores is what you're seeing is on the finance cost side, where we had a liability to pay Macquarie, which was marked at present value in the books and has been paid off in full earlier than it was due. So that debit has come into the P&L. Apart from that, about 17 crores odd is on account of the change in exercise period of the ESOP. So that's again a one-time charge in this quarter. EBITDA, again, it has come down, but that's owing to a $6.5 million project,
right?
Which is pushed.
So that liability, to understand this a little better,
quarter, while costs are booked in this quarter.
Mr. Fadia, so I understand that this liability, this one item, now that has been resolved, but what's the current debt on your books and the liabilities that you have right now that you might have to contend with going ahead?
So in fact, we've just, again, early prepaid the NCDs which we had due to Stanchart Private Equity. That's been paid off on the 2nd of November of about 190 crores. The net debt right now, end of September quarter, is about 2,000 crores. And other than that, in the next 12 to 24 months, we don't have any significant chunky payout other than the regular amortization.
Can I also ask you about what sort of projects have worked for you this time around, and what is that pipeline really looking like going ahead, and what are your targets for the order book?
Sure. I think, currently the group order book stands at about close to $500 million over the next 3 to 4 years. The creative services business is about $230 odd million. We just delivered in this quarter. We delivered Venom. We delivered Ant-Man. Then we delivered the Mission Impossible, the last of that, Mission Impossible Fallout. And in production currently we have the next Wonder Woman, the next Avengers. There's a spin-off of the Fast and Furious series called Hobbs and Shaw. So the pipeline is pretty robust in that sense. And we see the next few quarters in terms of order book or revenues look pretty good.
So then do tell us, with all the projects that you're mentioning, what kind of markets are you currently focusing on? Is there going to be an increased focus on the international business, or do you see more opportunities coming up in the domestic market as well? Because I don't hear you saying too much about that, any of your projects.
So, our largest contributor to revenue is from the international markets. About 85% of our revenue is anyway international. We do a fair amount of work for the Indian domestic markets. Manikarnika, where we are involved. Robo 2, we are involved. We are involved in the Brahmastra from Karan Johar Productions. Those are movies which are involved in the domestic side. But obviously, the largest contributor to revenue is on the international side. And apart from that, I think we are very excited internally about the new OTT players like the Netflixes or the Amazons of the world, and the kind of work they are doing, because they are doing more and more of original content production, and their demand for visual effects services is pretty high itself. So that's an exciting new sort of revenue stream which is opening up for us. Augurs well for the next few quarters.
Fadia, in the kind of revenues that you earn from OTTs as opposed to the traditional clients that you have?
We don't split them up currently because they're just about last 2 quarters. Like we were involved in the this series called Sacred Games, came out on Netflix, and so that part of the business is just sort of picking up, and I'm sure over the next few quarters that seems to be more and more taking more and more traction.
All right, I just want to thank you. That's Nishant Fadia, who's the CFO, Prime Focus, giving us more of a sense as to how the numbers have really worked out, as well as the kind of pipeline that they're looking at going forward. Thank you for that conversation. Still ahead on Lunch Money, we're putting the spotlight on Jet Airways as concerns